Eric Bergloff, the Chief Economist and Special Advisor to the President at the European Bank for Reconstruction and Development. Welcome to Knowledge at Wharton.
Thank you for having me.
We have a lot of ground to cover because the issue of corporate governance vis-a-vis the financial crisis and the recession is a large and important topic. But we do want to focus, if we can, on governance exclusively, and also to get your views on the European aspects of this story. But first of all, can you talk a little bit about the role, if any, that governance played in either triggering or exacerbating the financial crisis that began in 2008?
Yeah, it's a bit of a paradox that on the one hand you have probably the greatest governance failure that we can remember, and on the other hand, looking at the research that has been done now to try to document, which aspect of governance was it that made the crisis happen or contributed to the crisis. The results from that type of research is not very clear, and it's not. You have work being done on showing that banks with concentrated ownership was not different from banks with widely held shares, and you have a lot of work trying to compare banks that were state-owned banks and private banks. Not a lot of difference. There are a few facts that stand out, but on the whole, I think we have just started to unravel what happened in the crisis in terms of corporate governance.
Are researchers looking at the role of not only issues of ownership, but the role that the boards of directors of these various institutions played?
Yes, I certainly think that's part of it. And the problem with that is that the role of a board is very different in a bank from in a company, because the banks are much more regulated and supervised. But the board is also very different if you have a controlling shareholder or if you have a widely held structure, if you're a state-owned firm, so you're private. So it's also hard to say even there that boards should be of a particular structure, have a particular number of independent directors, should operate according to specific rules and so on. So it's hard, certainly in this crisis, to point to that a certain type of board made the crisis less likely.
Is it reasonable to think that researchers could determine whether boards in these various companies and banks acted irresponsibly or responsibly or just with no knowledge in terms of understanding and analyzing the events that led to the crisis and the actions that the executives in their own institutions performed? I guess what I'm asking is, often it's kind of a cliche, but boards have been thought for many years by some critics to be more or less rubber stamps for whatever the chairman of the company and the CEO want to do. And many people may have that feeling either on an informed or uninformed basis about the financial crisis. Is that something that you and other researchers are looking at as well?
Yes, definitely. So as I said, a board that has to overlook what the manager does and representing only minority shareholders has a very different role from a board that's trying to control what an owner-manager does. It's an owner that's very deeply involved in management of a bank, but in particular. I think also what one should remember is that the board, when you have a bank that is regulated and supervised, maybe the board is not the structure that we should expect to react. It would be nice, but what we see in this crisis is that there were sort of trends or sort of overwhelming patterns of behavior that where the boards more or less went along. As you said, they were sort of rubber stamp of particular management behavior. I think one thing that people are looking at, which I think is a very important aspect, is whether you want to have friendly boards or hostile boards. I'm probably someone who thinks that a board that has some degree of sort of cooptation, some degree of alignment with management is something you want. But you of course have to also then have controls within the board to make sure that management does not get away with anything. But again, boards may not be the function that in the end will control or prevent a financial crisis from happening, unfortunately.
So boards may not be enough.
Boards may not be enough, and boards may not be even helping very much, unfortunately. Because banks also, one problem with banks is that they may have become ungovernable. They have become so large. So the only thing that really bites on these large institutions is regulation and supervision, intervention from the government. So again, I'm not, that's maybe a too negative view of boards, but I'm just putting in perspective a bit, what we can expect from boards.
Sure. So in terms of learning lessons from the financial crisis and then implementing whatever changes institutions and their boards feel are necessary, you're saying that some of these reforms, so to speak, would have to come from outside the institutions themselves and then probably from government.
Yeah, some of these reforms will have to come from government, I think. One thing I should say that seems to come out is that attracting the right people to be on the board. So whether they're hostile or friendly is maybe not that's important. That's important to find the right balance there, but also making sure that you find the right type of people. And one thing you find, for example, in Europe, you have looked at the banks that have been sort of protected by government and especially favored by government, and they have done very poorly in the crisis. And when you look at what type of people were in governance positions on boards in these banks, it seems like they were much less competent and much less able to pursue or fill this role of governance. So I think one thing we should think more about, what type of people, what type of backgrounds, what level of competence should we have on boards?
Based on what you know now, are there certain reforms specifically that you think should be implemented on the part of financial institutions?
Well, I think we see now a trend globally towards two important trends globally. One is that national governments are putting much more of control over financial institutions, particularly those countries that don't have their own institutions but have subsidiaries of large international banks. Those governments, they felt that they were at the receiving end of the global crisis. They need to do things. They could not accept to be such victims, and they're putting in place regulation. That's going to make it very hard to have the same level of financial integration, the same level of financial openness. That's one trend. The other trend is the trend towards sort of global harmonization of capital requirements, liquidity requirements, what to do about large systemic organizations, what to do about levies on banking systems, and so on. That trend goes against, but I think that is now generating some results, and that's, I think, on the whole, very positive. But it's too slow and probably, well, I wouldn't say too late, because it was very hard to do things in the midst of the crisis. But also the political momentum for some of these reforms may not be there right now.
Yeah, that may be an understatement. Here in the U.S., I think I would think that many people, average people, even people who were like yourself, who were kind of immersed in this all the time, may wonder whether there's a chance that some of this might be forgotten, as another year goes by and another year goes by, and perhaps the reforms are not as comprehensive as some would like to see. I mean, there may be a sense that, why hasn't anyone been punished or put in jail or something for some of the activities by these institutions having caused such terrible repercussions around the globe? Is that likely to happen? Are we likely to see the Basel Committee or the government of the United States, whether it's the SEC or other institutions, actually coming down hard on some of the individuals or institutions that engaged in these activities?
I don't see that happening. I think there is a very difficult trade-off here, because in the middle of the crisis, first of all, there are many things that you have to do just to try to keep things going. But one thing you don't want to do is to have harsher rules on banks in the midst of the crisis, because you want banks to do whatever they can to lend to the real economy. So that's why we have been waiting for these rules for so long, and also now, if you look at these most recent international rules, the Basel III so-called rules on capital adequacy and liquidity and so on, they are going to be phased in until 2019. It's a very long period, and it's exactly because you don't want to impose rules too early in the recovery. You don't want to threaten the recovery. So that's one aspect of why we have to wait so long. And then I think on some of the issues of compensation, which I think one could have addressed earlier, and when there was a political momentum, I think there we lost the window. And that whether that is because of the lobbying power of the financial industry, because we didn't really have good alternatives. We didn't maybe have good models for how to regulate compensation. I think now we are slowly starting to realize, and maybe we knew all along, but we have much stronger evidence that compensation was a very important aspect of the crisis. And so the way we reward managers is absolutely critical for their behavior. And that, I think, is something we really need to sit down and work on. And here, whether this can be done globally, I'm not sure, but there are now rules coming into play that have been designed globally, and so they will play some role. I'm not sure how powerful they will be in the United States.
The issue of compensation that you raise, of course, is the one that touches, I think, everyone who reads about this crisis because of the outsized compensation packages that many CEOs had. Do you really expect that that those packages will be adjusted, that the incentives will be adjusted in such a way to perhaps forestall the next crisis?
I can't speak so much about the United States, but I can say from the UK, and the UK, is very closely related to the US in this regard. So, things that happen in compensation in the US affects what happens in UK and vice versa. And in the UK, it's very clear that base salaries are coming up, and bonuses are coming down, and actually a lot of employees often prefer this. The thing is that it's often a more costly way sometimes of rewarding people, because you have to give raising the base salary turns out to be quite expensive. So there are some. I know in London now, for example, we are recruiting in the similar markets, and I think some expect 80% increases in base salaries in London this year, which is quite dramatic, and
sure.
and that whether that is that we're seeing happening. Whether this will resolve some of the issues, I'm not sure.
Just one or two other things before we close. In your view, how have European institutions and their regulators approached or attacked the financial crisis compared to U.S. companies and regulators? Have they both been looking at similar reforms? Have they looked at this in much the same way or not?
Well, I think there is a common pattern. It's one of a very reasonable response in the crisis. Maybe slightly late, but still, when it finally came, it was a very strong response, and both at the national level, at the sort of regional level in the European Union, and at the international level, the role of the international financial institutions, particularly IMF. That was a very good response. I think if we look back at it, without this response, the world would have been much worse off. I think when we look at dealing with the causes of the crisis and all these things we discuss now in terms of compensation, regulation provision, the response has been much slower, both in Europe and in the United States. In Europe, you had the additional problem of the European Union had no mandate in this area really before the crisis. That is changing now quite dramatically. So they are now creating new institutions at the European level to deal with both regulation and supervision, with particularly prudential regulation, trying to look into the health of these institutions, the systemic importance, and so on. We didn't have anything like that before the crisis, and the European Central Bank very explicitly said that was not their role, and that was something that was very damaging in the beginning of the crisis. And luckily, in the end, politicians reacted, and we got a good response, but it took a long time. And that's something we also need to think about. How do we put in place a good crisis management system? Because now these institutions are global, and they probably will remain global in one form or another. We need to deal with that. And then how do we deal with all these links between countries? And if we want to be able to resolve institutions, how do we do that? A lot of the issues are now on the table and needs to be addressed.
Some commentators have said that that not enough has been done to prevent another crisis, and that it's only a matter of time before banks and brokerage firms and and other financial institutions kind of repeat the same mistakes or the same actions they had done previously, and that it's just a matter of time before we see the next crisis. Do you believe that, or are you optimistic that reforms will take place to forestall such a crisis again?
I think we are making progress on some aspects of regulation and supervision, but the deep structural issues are not being addressed. And here I think there's only one country that I know of that is trying to tackle this, and this is the UK actually, because they have now put in place a commission. Of course, when you put in place a commission, there's not a guarantee that something will happen. It could actually be a way of sort of postponing a discussion. But actually, the way this commission is constituted, the people on that commission, I think, will bring about a discussion that goes to the fundamental aspects. What should we do about what should commercial banks be allowed to do, and what level of risk should they be allowed to be engaged in? A lot of these deep structural issues that I think they are the one we need to address to be able to reduce the risk of a future crisis.
And do you think the United States and other countries, European countries and others, should look to the UK for any benchmarking or guidance?
Well, I think it's too early to say what will come out of this, but I think all the countries need to think about these structural issues. And I think particularly the United States, because the United States is the home of many very important global financial institutions. So, the U.S. probably doesn't want to be, responding to what other countries are doing here. They should take the lead.
Okay. Dr. Bergolof, thank you very much for joining us today.
Thank you for having me.